Hello, I'm Steven, the calculator guy, and today we're going to talk about Aperture Finance. So what is Aperture Finance? Well, they're a protocol that did something that I have wanted to see be done for a long time. A few months ago, there's another protocol, Nexus, that was going to try to do this, but it's super complicated, so they sort of stopped trying. What this is automating the anchor, mirror, delta neutral strategy on Luna. So if you're unfamiliar with the anchor, mirror, delta neutral strategy on Luna, it's basically getting a yield on a stablecoin that's between 25 and 45% APY, which is incredibly high, and that yield is relatively stable and relatively low risk. But it's pretty complicated. And by pretty complicated, I mean this is the strategy. So I've done a video on how to do this manually. Donku_R has done a video on how to do this manually. Multiple videos, actually, I believe. And we've both done videos on anchor and mirror individually. So I'm not going to go through this because it is intense, but I will say the basic idea is that you deposit some UST, which is a stablecoin, into Anchor to get AUST, which is a yield-bearing stablecoin, which appreciates in value by 20% per year. You go over to Mirror and use it as collateral to open up a short position, which just means you borrow one of these synthetic stocks and then use some other money to buy some synthetic stock. So you've shorted and you've longed it the same. That's the definition of delta neutral. And then you farm that long against UST. I know that sounds complicated, and it is, which is why I'm so excited that the process has been automated, right? I've been wanting this for a long time, and I'm very excited that it's happening. Now, what I will say is Aperture is still in the test net phase, so people on the wait list have access to this, but they're not going public until their audit is complete, and it's important for that to happen. Now, they're confident, of course, in their protocol, but they've sort of said we're not going to go public until after our audit, and I totally get that because there are so many smart contracts involved, right? You have the smart contract of Anchor. You have the smart contract of Mirror. You additionally have the smart contract of, I'm going to forget the name of it, the aggregator, which is Spectrum. Right, so Spectrum is the yield aggregator, the auto compounder for the long. So you have Anchor, Mirror, Spectrum, and Aperture. You have 4 different protocols, which means 4 different smart contract risks. So, you know, you take that for what it's worth, right? Make your own risk analysis based off that. I trust each one of those individually. But I will also be interested in seeing the full audit. Though, you know, truth be told, I will probably invest in this test net with a small portion of my investment because I'm super excited about this possibility. Okay, so basically, before we get into how to utilize this, I want to talk about like Aperture's long-term vision because it's super, what's the word for it, ambitious. Basically, they want to be a marketplace for strategies, which means they want to allow people to participate in complex DeFi strategies all across DeFi. So not just on Luna, but on all other blockchains as well. So, you know, they've already done this with a really complicated strategy. So I'm not doubtful that they'll be able to do it with other Luna strategies. I'm hesitant to believe they'll be able to do it with other blockchains because that's super, super ambitious. Also, I don't know how many other really great strategies there are on other blockchains. But for example, on Luna, there's strategies now with Edge and Stadler, with Luna X. And so I do think there are many strategies that could be automated on Luna, and that could be an interesting start. So we'll see. I mean, they've done this, so they have the brains. So they want to do that. They also want to allow you to use cross-chain assets for protocols on other chains. For example, they talk about being able to use USDC from Ethereum to get a yield on Anchor, which would be amazing. But we'll see, right? These are things sort of long-term visions. But even if they don't accomplish any of that, the fact that they've automated this particular strategy is what excites me. So when you go to open a position, which is as simple as clicking invest when you have UST, you're going to, if you click fees and settings, you're going to see this, which talks about target collateral ratio. So the target collateral ratio, in order to understand this, you need to understand collateral ratio. So let's jump over to Mirror really quickly to understand that. And I'll use UST just because it's easier to conceptualize in terms of dollars, not yield aggregated dollars. So here, if I have the safe collateral ratio of 200%, what that means is that my borrow that my collateral is 200% more than my borrow. So if I'm borrowing 3.06 Apple stocks, it means that 3.06 Apple stocks is valued at 50% of my collateral, or that my collateral is valued at 200% of my borrow. So that's how you switch between LTV, which is loan to value, and collateral ratio. Probably most of you are more familiar with LTV. I know that I certainly am, but collateral ratio is simple to get as well. To convert from collateral ratio to LTV, all you have to do is take the number 1 and then divide it by the collateral ratio. So 1 divided by 200%, which is 1 divided by 2, is 50%. So here the LTV would be 50%. And the liquidation threshold, which is 150% collateral ratio, would be 66.666 repeating LTV, which I think is pretty, pretty low, but you know, it is what it is. And then the maximum collateral ratio is 300% roughly. I think it's 300. I can squeeze a little more percentage out of there. Yeah, 306%, which is an LTV of roughly 33%. So maximum LTV 33%, huge buffer against liquidation. Here, safe, pretty big buffer against liquidation, and then liquidation here at 66% LTV. So again, to switch from collateral ratio to LTV, just divide 1 by the collateral ratio. So with Bitcoin, we probably would want a collateral ratio around 270%, which means you're only going to get liquidated if Bitcoin increases by 80%. Now, are you going to get liquidated? Well, that's an excellent question. No, you shouldn't get liquidated because this has rebalance and liquidation protection. What does that mean? It means that if the asset gets close to liquidation, right, to prevent this from happening, the rebalance processing case will bring the collateral ratio back up to the target. I can tell you what happens. So when you do this strategy, it creates a long farm, which means you have the M asset, the synthetic stock, and UST being farmed for some APR, APY. You also have your short position, the position that you borrowed. Now, in order to make sure you're not going to get collateral, you're not going to get liquidated, this protocol will take some of the asset out of the long farm and then pay back the loan, right? Increasing your LTV and decreasing your collateral ratio back into a target range against liquidation. So it does have liquidation protection, which is really cool, really nice. But of course, you don't want to be utilizing that frequently because then you're paying back your loan, which means your overall strategy APY is going down. So you don't want to be having to do that frequently. So instead, you could use the recommended collateral ratio here, and here's why. Right? If you go back here, you can see that at 270% collateral ratio, you get 26% roughly APY. At 200%, at 200%, you get 27% APY, which is 1% more. Is that additional risk really worth 1%? Well, I don't think so. Even though there is liquidation protection, there are various smart contracts that have to be interacted with in order to guarantee that protection. For example, it may have to pull some of your LP from the long farm out of Spectrum, and then sell it, and then go to Mirror, and then repay that, which is incredible that it does that through smart contract. But you know that's fees that you're paying to some extent. So for 1% APY less and an incredibly low risk of liquidation, I wouldn't mind going with the 270. Now for Apple, completely different, right? If we look at Apple stock, and you should always look at charts, right? We can see that the odds of a 33% increase in price, right? If we're at a 200% collateral ratio, the odds of a 33% increase in price are incredibly low, right? The last time that happened, let's see, 33% increase, that took like 252 days for a 33% increase. Even at the most bullish run here, it still took 54 days for a 33% increase. So I would not be hesitant at all to do a 200% collateral ratio with Apple and maybe squeeze out one or 2 more percent APYs. Now I can't invest in these now because it's a weekend and the stock markets aren't open. You can only utilize these strategies or open these strategies when the stock markets are open, because that's how these synthetics stay pegged. Yeah, so that's pretty much it. Cool. One thing to know is that this protocol will also rebalance roughly every 5 minutes, which is pretty cool. This is protecting against impermanent loss. So the process here, basically it utilizes some buying and selling mechanism of UST and the M asset to make sure that your short and long position stay roughly the same. That's the very, very basic idea, and it does this roughly every 5 minutes to avoid impermanent loss and to maximize yield. And it talks more about that here under delta neutrality. So of course, there is more to this protocol, but that's my sort of main interests. I am not going to invest in these yet, even though DOT, I believe, has pretty decent APY. Yeah, DOT has 36%. What are they at? 270? Yeah, 270. So I could do this. Let me look at DOT in crypto. But we're looking for an 80% increase. When was the last time it happened? Well, we have an 80% increase here within roughly 2 weeks. So, I'd have 2 weeks to exit the strategy, but I don't want to have to exit this strategy, right? So I'd rather do this on a stock. So I'll wait until tomorrow and open my position on a stock. It's as simple as clicking invest. You can also choose your gas because this is the Terra ecosystem, and they have that function, which is really cool. So the how-to is super simple. But yeah, that's it. So look out for the audit, look out for the public release. If you want to start investing in this sooner, try to get on the wait list. To do that, just join their Discord. Hopefully I'll put the link in the description. I should remember. And you may get waitlisted and then get emailed the invitation links and all that kind of stuff. You can see there's already $2.5 million in TVL, and I imagine this is just going to go through the roof once it becomes available, because anything close to delta neutral that gives you more than 20% APY is incredible. I mean, look at Anchor with 20% APY, and it has $13.6 billion of TVL. So I can only imagine what Aperture will have if they get fully audited, if it goes well. Yeah. So looking forward to more strategies, looking forward to utilizing this soon. I will say that the DeFi Dojo Discord, Triple D, is going to be hosting Aperture for an AMA on Wednesday, the 9th of March at 10 a.m. PST, which is 1 p.m. EST, which is 6 p.m. UTC. And we're going to ask them a bunch of questions, and feel free to join us, right? So that's the free portion of the Discord. Anyone can be there. And we invite any of you, to come and hang out and, grill Aperture on whatever you're curious about. This is a very ambitious protocol. I'm sure some of you may have questions. Yeah, if you want more content, of course, you can join the Patreon. You can join the paid Discord. All of the faster strategies are on the Discord because those all happen in real time. You can ask questions in real time. We have a full team of people ready to answer questions in real time. And some of the quick, fast plays in DeFi only last a few hours to a few days. So I cannot put those out on YouTube because way too many people could get super wrecked by these really fast DeFi plays. And I just can't be answering questions on YouTube fast enough at all. So, I mean, also, it's good place for support for newer DeFi users, but I'm not going to shill my own product. Feel free to join if you want, and feel free not to if you don't want to. Come hang out in the free Discord. We'd love to have you there too. So thank you so much for watching, and have a wonderful, fantastic rest of your day.